So, hi class. So, good day to you. So, our class will start with adjusting entries. So, I'll share to you the slides. Okay. So, accounting adjusting entries. Entries. Credits to Palamo, Silva, Australia, Milianes, Tuero, and Clarison. Okay, so in accounting, adjusting entries are journal entries made at the end of an accounting cycle to update certain revenue and expense accounts and to make sure you comply with the matching principle. Okay? Again, why is it there's an adjusting entry? To make sure that you comply with the matching principle. Right. So it states that expenses have to be matched to the accounting period in which revenue paying for them is earned. There are four main types of accounts that need to be adjusted, prepared: expenses, accrued expenses, unearned revenues, and accrued revenues. So the prepaid expenses are expenses that is initially recorded as an asset but are expected to become expenses over time or operation. Example, supplies and prepaid insurance. So what are prepaid expenses, class? These are assets. No, when you receive that specific asset, like for example, there's a prepaid rent, you record it as an asset. The moment that the asset, for example, is a prepaid rent, it is being served already or it's being used na, then it's considered already as a revenue. And the prepaid asset account will be adjusted. So, for example, prepaid rent. So, mag-debit ka ng prepaid rent sa mo, kaya nagbayad ka in advance. So, when you record, when it's already considered revenue on the other end, sa atong imutang bayaran ng imo rent, it will be considered as expense to your part, not revenue, sorry. It's expense already after you already incurred that specific expense account. So, for example, nagpalit ka ng bulto na insurance for 1 year, like for 1 year insurance. So after 1 month, your 12 months insurance will only be 11 months. So your asset will be 11 only. Because why is it still asset for you? Because it's still receivable for your part. I mean, we pas dyan na utilize. It's not receivable, ha? But it's like undo pa nimo sa pa, balance pa, unutilized na portion. So the 1 month portion is already utilized, and that's why it's called expense. The same inventories and supplies. Right. Accrued expenses or accrued liabilities are incurred expenses but not recorded. Example for that is wages payable. Okay, so meaning, natrabaho na, but then way pa nabayaran. So, utang siya. And then, unearned revenues are revenues that are items recorded as liabilities but are expected to become revenue over time or through the normal operations of the business. These are deposits by customers for work to be done in the future. Example for that is unearned rent. Meaning, it's still a liability on your part because it has not yet been done. But if it's already done na or finished na, as agreed na, then it's already considered a revenue. For the meantime na waya pa, it's still a liability on your part. You have to deliver. Until then, you can still consider it a liability when it's already converted to performed or it's done, the contract's done, then it's already earned, then you consider it as a revenue. Okay, so accrued revenues includes only recorded when it's cash, when it's received. So at the end of the accounting period, there may be revenues earned but not recorded. So these are called accrued revenues. So example is the interest income. So there are two major types of adjusting entries: the accruals and the deferrals. Accruals are for revenues and expenses that are matched to dates before the transactions has been recorded. Deferrals are for revenues and expenses that are matched to dates after the transaction has been recorded. So let's recap. Okay. Rewind. Accruals. Accruals are for revenues and expenses that are matched to dates before the transaction has been recorded. Before the transaction has been recorded. While deferral is revenues and expenses that are matched to dates after the transaction has been recorded. So remember the difference. Accruals before. Deferral is after. So what's the difference? Before, after. Accrual is before, after is deferral. The word defer means to postpone. So it's called after. The word before is to accrue. Iuna, before the transaction. Okay, so these are the two types of adjusting entries. So accruals are adjustments for revenues that have been earned but are not yet recorded in the accounts. Revenues that have been earned but are not yet recorded in the accounts. Not that have been earned but are not yet recorded in the accounts. That means natrabaho na, pero yet nag-record. Okay? Expenses that have been incurred but are not yet recorded in the accounts. Meaning, nagasto na. Ano trabaho? Nakuha na, expend mo na. I mean, you already incurred it, but yet yapan mo na record. So the accruals need to be added via adjusting entries so that the financial statements report these amounts. So para join matching, no? The underlying principle in this adjusting entries is the matching principle. You make sure that the revenues that are earned are recorded in the accounts. Expenses that are incurred are recorded in the accounts. Okay. Some accrued items for which adjusting entries may be made include salaries, past due expenses, income tax expenses, interest income, and billed revenue. So, like I told you class, for example, payroll, you don't record salaries every day, no? Because it's a lot of you in the, for example, if for example, you record every day for the salaries of the staff, and then it's a very troublesome for the accountant to do, no? Or the bookkeeper to do. Whereas if he will postpone it until the 15th or the 30th, then it is much better. Kay para dili hamok na trabahoon. Because if you do it daily, and anyway, may adjustments like absent or adjustments in salaries, then it's better to do it later. So some accrued items for which adjusting entries may be made will be salaries, past due expenses. Salaries, for example, he worked on overtime. Yeah? So it is already, the work is already done for salaries. Yeah? So, but then, dili is siya ma-record. It will be recorded only end of the year, end of the month, as adjustment. Because the bookkeeper or the accountant won't be recording it every day. You can have your entries at end of the month where all of the recorded information are there already. So the expenses already incurred, the person already had his overtime, but you don't record his overtime until end of the month because that's the only time you'll get the report, right? The same as the past due expenses when there are interest related to your liabilities, no? The penalties will only reflect end of the month. You won't be, although the expense already happened, but you won't be recording it. The expense already incurred, but not yet recorded. That is what the meaning of accruals. How about income tax? The same thing. The tax already incurred, but you will record, but you haven't recorded it yet. Why? Because there's still no information, complete information for you to do the recording. The same as interest income and unbilled revenue.